Hello and welcome to the Crypto Beat. My name is Kelvin Sparks. This is my co-host Tim Copeland, head of growth at The Block. Joining us today, we have Markus Infanger, Senior Vice President of Business Development at RippleX. Welcome to the show. How are we all doing?
Yeah, doing good.
Great to be here.
Nice. And before we dive into today's conversation, here's a quick word from our sponsors. It's a new chapter for crypto and digital assets. Institutions are flooding in, regulators are defining clear pathways, and capital is moving at warp speed. Are you ready to level up? Campus is the digital gold standard in crypto education presented by LMAX Digital. Master the skills you need to thrive in this new crypto era. Head to theblock.co/campus to get started. Now, let's get into today's episode, how Aviva Investors plans to tokenize its funds on XRP Ledger with RippleX's SVP. So I guess the big headline today is that Aviva it's like their AUM is roughly 280 billion AUM. So looking to tokenize their fund products on XRPL. That being said, I think, Tim, you wanted to kick this one off because I'm American. I don't know too much what's going on in Europe. So you're the expert.
I'm the expert on Europe, as they say. So Aviva Investors, they're looking to tokenize their fund products on the XRP ledger. How much demand do you think is out there for this sort of thing?
So look, I think overarchingly we're just about kind of like at the entrance stage of a new paradigm shift. I think that will really unlock not only a few billion dollar of demand that we have been seeing around money market products, being put on blockchains, but really trillions, essentially, as you probably all know. If you talk about traditional financial markets, capital markets, it's not only, I think, something like $1 quadrillion of total financial assets that exist in the world, but it's actually trillions of dollars of economic activity that happen today. And so I think really moving from crypto as being more of like a market into becoming sort of like a backbone to the financial infrastructure through this notion of blockchain technology. And so we're starting to see the early signs, and this is definitely one of the proof points.
Sure. And why would a company like Aviva Investors want to tokenize their funds on chain? Like how does it make it better for consumers? What are the advantages?
Which is obviously a very important question to answer before doing things like this. I wholeheartedly agree. And look, if I would frame the problem statement in very simplified terms, I think if you look at the core of the financial market infrastructure, it's essentially been stuck in the pre-internet area. And I mean, at really the bottom sort of like layer of how financial markets operate. And how this manifests itself, it's slow and full of friction in the sense that settlements take something like T+2, so 2 days after trade on average, and something like 50% of a total financial transaction is. Sorry, do you guys hear me well, or is there?
You basically briefly dropped out, but then came back.
Okay, sorry about that. So look, if you look about it in terms of like operational inefficiencies, I think 50% of transaction costs in financial market are related to operational friction. There's trillions of dollars of sort of like liquidity that are trapped for things like pre-funding buffers because things are moving slow. And so the promise here is blockchain technology networks, they're global out of the gate. And in the example of the XRP ledger we're working with, it can settle any transaction in a matter of 3 to 5 seconds deterministically at a fraction of a penny. And so I think that operational infrastructure and essentially really the sort of like the push to update the core of the financial market infrastructure in the 21st century, that's what's driving this. Appreciate that was a bit of a detour, but I hope that answers the question.
Sure. And then will these sorts of tokenized funds, will they be permissioned, KYC'd, or will they sort of be freely available for anyone?
Yeah. So I think, look, we're in an initial phase where you want to make sure these products can unlock real world efficiencies in how financial markets operate today. And obviously we live in a world where there are regulations and compliance requirements that these financial institutions need to fulfill. So in the initial phase, certainly these products will be operating in a way leveraging compliance and regulatory features that are purpose-built in on the XRP ledger, like, for example, decentralized identifiers, permissioned environments. But that doesn't mean, there isn't obviously utility for that, because obviously, you can do things like intraday collateral mobility versus, what's possible in the legacy financial workflow of these assets today. And so I would say it's kind of like, it's what we call institutional DeFi, where you have essentially a compromise between wanting to operate at scale, unlocking these trillions of dollars of sort of economic activity, but also the reality of compliance and regulatory frameworks you need to adhere to. And so that's essentially what's going to be sort of like the cornerstone elements to make this possible.
Yeah. And when you talk to institutions, and sort of companies, how many of them are interested or curious about going on chain versus how many of them are just like, we don't want to deal with any of this nonsense?
So this is a very good question. I would say this has changed dramatically. I've been with Ripple now for 7 years, and I remember in the early days, I was going out there talking to some larger financial institutions, asset managers, family offices, and when I talked about crypto, XRP, the XRP ledger, they looked at me with some, like I would say more elevated hesitance. What is this about? And just really not understanding why they should care that much. And I think that conversation has largely changed. And it's come through, like certainly proof points like, for example, BlackRock, basically saying, hey, everything will be tokenized, launching a tier one sort of like tokenized treasury on chain. And I think it's no longer a conversation of like, hey, would this happen at some point? I think the critical mass has been reached with this industry now being a multi-trillion-dollar industry. And it's now really become way more tangible. I think we're now in a period where it's still a lot of piloting going on, including, this Aviva partnership that we announced in the beginning. It will certainly be more of a pilot phase, but I think institutions are really pushing to unlock these efficiencies that blockchain technology promises that I mentioned a bit at the outset, and doing it rather sooner than later. So I think we're at the stage where, we're moving from sort of piloting, issuing assets, seeing them on chain, towards unlocking them. And that's really where the ultimate value lies here, right? That tokenization by itself matters, and bring these stuff on blockchains is important, but the ultimate value will come from integrating it into workflows and doing things more effectively than we can do today, right? And so I think the conversation there has largely changed, just to go back to the impetus of your question here.
Yeah, absolutely. And the data looks amazing. I think Ethereum's still leading in RWA TVL. Solana over the weekend hit all-time highs for RWA holder counts, was around like 146,000. And I think there was another announcement today with Kraken and the NASDAQ that just came out maybe an hour ago, which was really, really cool to see. So the writing's on the wall and the rubber is starting to meet the road. That being said, what's the most exciting growth opportunity in RWAs at the moment, in your opinion?
Yeah, there's a couple of them. I would say what excites me the most, or what excites us as a group the most, are two things. One is payments and sort of like, stablecoin powered payments. And the other one is this notion of repo markets on chain, collateral mobility at large. And so both of those are opportunities we're really honing in on and focused on. The stablecoin payment side goes without saying. Ripple and payments, that has been a marriage since many years. That's been obviously very, very productive and all about growth. And obviously the fact that we launched our own stablecoin, further sort of like amplifies this. And so we're looking for ways how we can really tie in the XRP ledger more with our payments products, and obviously the RLUSD being sort of like the US dollar vehicle there, just for more instant payment, with instant foreign exchange transactions and whatnot. And on the notion of repo, so that's basically Aviva partnership we announced, which is really steering in that direction, but also a previous one we announced with DBS, Franklin Templeton, which is also in the same notion. And why I think it's a big deal is, first of all, repo is essentially like secured lending to manage sort of like liquidity of Wall Street. It's kind of like the daily plumbing of Wall Street, so to speak. And today, it's like, I don't know, multiple trillions of dollars that are exposed in these sort of like markets. And I think, there's an opportunity here to really enable these forms of collateral, like money market funds, and obviously, fiat in terms of like representative stablecoins, to operate way more efficiently and move from like a T+2 kind of situation into an intraday situation. And if you think you're a treasurer and you can all of a sudden manage your finances intraday, seek yield opportunities intraday, or manage your liquidity intraday and just more efficiently, reducing credit costs, etc. It's just massive in a market that kind of like underpins so much of Wall Street and financial market. And so we're very excited about that that sort of area. What I will say as a last one quickly is, I thought maybe 2 years back, I thought, hey, real estate's going to be very big here because it's the biggest, asset class in the world. And it's also full of friction. If you think about the real estate transactions, it goes many months and it's just very, very burdensome, right, for everyone involved. However, it proved to be a bit complicated, I would say, in the early stage in terms of like how blockchain technology can service that use case and bring instant benefits. And so we've seen more, things like tokenized money market funds gaining in traction, etc. However, what we've seen last year with the partnership we did in the Middle East with the tokenization player Control and also the Dubai Atlantic Partner, which is the official sort of like real estate governing sector in the UAE, they've been bringing title deeds in the UAE on the XRPL, and we're now in this partnership moving into sort of like a phase 2 where secondary market activities is starting. So I would say that's also like a pretty big market there that's starting to be developed, and where certainly the value add blockchain technology can bring is absolutely massive. So these are sort of like the 2-3 buckets. Yeah.
Understood. I was actually curious about this as I was looking into Aviva, them being a direct manager who manages things like fixed income, real estate, equities, and just other like multi-asset strategies. I was kind of curious, like, of the various collateral types, I mean, you just mentioned even real estate itself. Where's the most demand for borrowing against these days in traditional markets? And do you think that carries over to crypto?
Yeah, it's a good question. I would imagine, kind of like in the beginning. So the short answer is I think there's going to be an evolution, but I think in the beginning we'll see much of the same. Like, for example, we see today things like treasuries or just money market funds that are really tier one as being sort of the most like for cash. And I would say we're going to see that happening on chain as well, in terms of like where we see the lion's share of basically liquidity management happening. It's just going to be done more effectively and more efficiently, and so it's going to add value to participants in that workflow. I think over time we'll also see the role of crypto increase there. Whilst today it's maybe a bit challenging to expect financial institution to accept something like Bitcoin, Ether, Sol, or XRP as widely accepted forms of collateral. I do think there's an opportunity for this to continue and ongoingly grow. And the example of XRP is obviously a very efficient asset. It doesn't carry any counterparty risk. It's basically backed by code. It's supply limited, it's jurisdiction free. And we're seeing, in fact, with our acquisition of Ripple Prime, and in that prime brokerage business, that the use of XRP has meaningfully increased. I think the total XRP deposits and then sort of like used as collateral in lending markets has increased over 100% in the second half of last year, and there's billions of XRP now deposited there for that kind of use case. But yeah, to go back to your question, I think in the beginning will be more of the same, but unlocking definitely more efficient ways to manage liquidity, harness yield opportunity, or just access to capital. And then over time, we'll see also, other assets that were previously thought a bit more liquid, that actually can become more liquid and used as collateral. And that will, in and by itself, add to more productivity in these use cases.
Sort of institutional DeFi grows on the XRP ledger. What different ways can that stimulate demand for XRP? Like you mentioned about use of collateral, are there sort of other like real use cases for it?
Yeah, I start by saying, XRP has a privileged state on the XRP ledger in the sense that it's the native asset and it's the only native asset on the XRPL. It's basically all transaction fees, reserve requirements on the XRP ledger are denominated on the XRP. So it's kind of like tying all the network activity directly to the asset. It's kind of like the path of choice when there is some illiquid assets in connection with each other, and XRP will be used automatically in a function called auto bridging. And at large and into the future, increasingly, I see really XRP as sort of like the glue on the network that connects liquidity and settlement, across it. So as a bridge asset for things like stablecoin transactions or multi-asset conversion flows, and definitely as well in terms of like, a form of collateral in things like lending market. So to give you an example, this year, we're going to see the launch of a native lending protocol, hopefully, for the XRP ledger that's recently been released. It's currently up for voting, and it allows essentially XRP holders to participate and provide capital versus, for institutional grade sort of use cases. So I see it really as sort of like the glue in a financial network that will be powered by this technology at the heart. And by the way, we also believe in a multi-chain world. We don't believe like, hey, the whole world is going to run on the XRP ledger, but because the way it was designed, institutional grade first, very efficiently in terms of like how it's designed, very purpose built for integration with existing financial markets and financial system aspects. We believe it's going to play obviously an important role.
Yeah, and it's interesting you say about the growth of the native lending platform. If you're looking for any former Aave developers, I believe there's a few kicking around following the recent governance issues.
Surprisingly, though, they're still making all-time highs with respect to usage. I mean, I think it was because there was a basis trade collapse with respect to SUSDE, but I think it was like 155K weekly active users a month. I got to double check exactly what the time frame was, but hey, they're still chugging along, surprisingly. Sorry, just want to add
that. So in terms of AI, are you seeing much development with usage of AI across, XRP Ledger or sort of within the ecosystem?
Look, what I will say, it's definitely top of mind. Very intrigued about the topic and very excited about the opportunity at sort of like the intersection of AI, blockchain technology, and institutional finance. And I'll unpack it a little bit on different layers, but maybe to just address your question up front. So we have seen a few very interesting projects building on the XRP ledger around the AI. One is called T54. They just announced a founding round publicly, and they sort of like built out just basically core infrastructure for the XRP ledger to basically be integrated in sort of like agentic payment infrastructure for API calls and things like this. But yeah, so the way I'm thinking about it at the high level is, if you reduce the purpose of blockchain technology to one sort of like minimum denominator, it solves for trust, and I think everyone will more or less agree to that. And if you think about one of the biggest challenges that AI is facing in terms of becoming really, or in terms of like fulfilling its potential, it's that challenge around trust, right? Like, how do financial institutions who use things like, Claude for enterprise, or who build agents that that help them around productivity, how can they really trust them to act around financial activity? Let's say, somebody's building an agent in a bank looking to basically release or unleash opportunities around doing repo activity more efficiently. You can't just tell the agent, hey, just go and do it. Here's market access, and you just go and execute. However, if you put something like the XRP ledger in the middle, or blockchain technology in the middle, where you have programmable sort of like compliance features, you can, like with things like decentralized identifiers, know your transaction / know your agent, and you can sort of like almost symbiotically integrate a trust layer into this together. And so I think at the intersection there's something very powerful that blockchain can help solve. And obviously, I would say AI, it's fair to say it's probably the one of the biggest unlocks for just productivity at scale, and obviously as much as well in financial activity. So I do think there's definitely a very symbiotic opportunity that we're definitely going to be leaning into, and you'll hear more in the near future and beyond.
It feels like very, very early stages, and I don't think I was conscious when the internet really started to take off like it did during the bubble. But this feels like the closest equivalent that I've seen in my lifetime to something this revolutionary. That being said, I'm kind of curious on the institutional DeFi side of things. How long, or what needs to happen before we see institutions using AI agents to handle transactions on their behalf?
Yeah, I mean, look, I am asking myself exactly the same question. And I think, so there's two things that strike me here. One is a headline I saw recently that something like 98% of all financial institutions already adopt, some of these LLMs, like, Claude Enterprise, or you name it. And so that's interesting. Sorry, I don't know exactly what the source of the stat was, but that's something that struck me. The other one is, this technology is clearly exponential. And I think we default to sort of like linear thinking. We say, hey, it's going to take a couple of years. So my take is it's going to come sooner than we expect. And if financial institutions, A, want to stay relevant, and B, want to harness the full power of this technology, going to have to find a way around it. And I think blockchain technology is able to really deliver an important piece here, particularly when it goes around like, in interoperability aspect versus just keeping things in a walled garden. And the last thing I'll say is, we may, and I know I'm not the only guy, who's been sort of like commenting in along those lines, but I think, if you look at, we've been building blockchain technology for over 10 years as a company, and obviously as an industry, and it may well be that we built it even more for agents or for software to operate on it than humans. And it's probably more natural for AI to use and harness blockchain technology than humans are. And also, obviously, versus going into legacy financial infrastructure and use that to operate meaningfully. So I'm pretty excited about the prospects here and for the whole industry, and also around institutional DeFi and amplifying what's possible there.
Yeah. What would you take, or what's your take on X402 coming to the XRP ledger? You're excited to see what agents are going to start making payments.
Yeah. So that T54 has actually been working on this. So I'm excited just to see from an exploratory phase what we're seeing in the initial stages, and what sort of like, what sort of activity are we seeing? For me, what's really near and dear to my heart, and I think as a company, has always been like, hey, utility matters, real world utility matters. So we want to see like, hey, it's cool to see something happening, but it's cooler when you see something that this technology supports and actually creates value in the real world. And I believe financial activity is sort of like the killer use case for blockchain technology at large. And so I'm really excited to see what's going to come on the more exploratory fund, and then as we lean more in to engaging with financial institutions more deeply about it and how they're using it and what we can do working with AI in combination with blockchain technology, what's going to be possible.
Yeah. Oh, I agree wholeheartedly. It's interesting though, for some reason, I mean, for better or for worse, Twitter is the town square for crypto. And you see a lot of this fear, uncertainty, and doubt around AI agents and crypto. But I mean, I think it's a perfect harmony. With the credit cards, the assumption of, or I guess the fear of you getting prompt injected is too large of a risk that you want to underwrite, in my opinion. Stable coins, okay, they're there. It's a single use kind of thing. Also, with respect to credit cards, if you need to keep spinning up these credit card numbers over and over again, well, if you had a mix of like hex characters, numbers, letters, whatever, you could probably spin up an infinite number. It's mathematically just easier to do and manage time and time again. So I don't know. That was a weird one over the weekend that I saw just a lot of big figures in the space saying that they don't think it's ready yet to scale. But I don't know. Folks like Picard and the Lightning Network have shown that with these payment channels, you can do some really, really cool stuff. So I don't know. Maybe it's just the overall doom and gloom that's getting to everyone, but I'm excited.
Yeah, look, I mean, there's a maturation process, and I do believe in the innovation power of the industry. There's other challenges, right? Like we haven't figured out the interoperability, right? Like, it's fair to say, hey, bridging technology is there, but is it battle tested and ready to operate, I don't know, $1 trillion of foreign exchange volume that central banks will hinge on, whatever today. It's probably not there yet, but I believe in the power of innovation. I believe in the innovation power of this industry as well, and we'll figure it out, and it's going to be an exciting place.
So do you think AI will help with the fragmented liquidity issue, or what are your thoughts there, just generally speaking, as there's chains all over the place now?
I think it will. And just one thing, as you were asking, crossed my mind is like, there's a lot of tribalism in crypto around different networks, different ethos of different networks, etc. And I think agents will not be tribal. And so I think that will help synchronization of liquidity. It's essentially synchronization of interoperability, which then leads to liquidity. So I'd assume so. You will probably, we see an amplification of the good stuff. We see an amplification of some of the more challenging things, but I think overall it's going to be a hugely net positive balance for our technology, but obviously for technology at large and the financial system at large.
Yeah, well said. Well said.
Cool. What is the Zao DAO, if I'm pronouncing that right? XAO DAO, and how much power will sort of go to that community?
Yeah, so I would say it's a relatively newly formed entity in the wider XRP ledger, kind of like ecosystem. It's essentially decentralized autonomous organization, like what DAO obviously implicates or implies, sorry. And it's built specifically, for the XRP ledger, kind of like as a governance layers to address some of the ecosystem fragmentation, to provide more of the community to have a vote on certain items, to get involved. And I would say it's a sign of more of the same that we've been seeing. We also announced recently a new APAC hub, so sort of like an XRP ledger ecosystem entity just focused on the APAC market, helping developers getting involved. And look, there's a core belief behind. We as Ripple, we want to see more other strong stakeholders in this ecosystem, because ultimately, if you think about this movement, it's really a movement that's powered by the thought of decentralization. And I think the blockchain ecosystem that will stand the test of time will be those that have several strong ecosystem entities collaborating together for basically use cases and good outcomes for these respective ecosystems. So excited to see what will come out of Xao DAO.
All right. And what are the goals for RippleX in 2026? What are you hoping to achieve?
Yeah, I would say it's three core aspects. One is really kind of like institutional DeFi. So we've been very excited to see last year a major ignition in terms of bringing high quality financial assets onto the XRP ledger. So the RWA market cap on the XRP ledger has been increasing to somewhere around 2 billion. It's firmly one of the top 10 networks around that notion. We're executing around an institutional DeFi product roadmap to bring more financial primitives where these assets that I mentioned can be integrated, then unlock obviously use cases like collateral mobility, stablecoin payments. And so they're really excited about the lending protocol. We just launched. We have atomic swaps. We have privacy. We have smart escrows, like part of our sort of like programmability roadmap to allow for more financial business logic on the XRP ledger. So that whole roadmap is very exciting. Then the second layer, I would say, is around ecosystem growth, where we're helping and coordinating with other entities to support the wider developer community, wider XRP community. You mentioned a few examples here. We also had like a bit of a reformation of the new XRP Ledger Foundation that we helped, just like coordinate and communicate. And then ultimately, also finding ways to work with these other foundations to support the resiliency, scalability of the XRP ledger at the core is definitely also like, top of mind for us. And ultimately, I would say a big piece that kind of like is intertwined into the first piece I said is how do we harness more of XRP and /XRPL's power in Ripple's overall business around like our custody product, prime brokerage, treasury, and sort of like offer integrated solution powered by XRP Ledger at the core that will help solve real world use case to move, exchange, issue, and settle value with financial services.
Understood. And I guess one thing I was curious about is, do you think the ETFs will play a role in the story of XRPL at all?
Yeah, I think, look, the ETFs are an important piece in the evolution in terms of like, I think of it like a free trade agreement around the native asset between traditional finance and sort of like, digital finance. And so it opens capital for all the innovators in the XRP Ledger ecosystem, all the builders. And so I think it plays an important role. And it's also a sign just of time of a maturing asset that hopefully over time is going to be increasingly recognized alongside things like US dollar, treasury as an asset, the wider financial system wants and can rely on in a complementary way. So I do believe the ETFs play an important role in the bigger scheme of things, and excited to see the interest around XRP, but also the wider cryptos like BTC and whatnot. So I think we will look back and definitely recognize this. This plays an important role in the bigger scheme of things.
And I mean, XRP has been around for basically ever with respect to crypto, while also being just huge. So what have you like? Do you have any thoughts on the adoption of XRP and how it's progressed over the years? Given, I mean, you've been working with the team for about 7.
Yeah, so I mean, it's as you rightly point out, it's been a top 5 cryptocurrency over, I would say, the lion's share of time that's been here. It's one of the oldest cryptocurrencies. I think it was the first cryptocurrency that was different based on the underlying network post Bitcoin. I think there was Litecoin first, but that was like more of derivation. And so, yeah, the momentum has been very exciting to see. It's obviously been designed with payments first and foremost in mind, around its efficiencies, just to settle value in a few seconds for a fraction of a penny. It's been doing that at scale with Ripple payments. And we believe, again, that it has an important role to play in the bigger scheme of things, or where, you know, financial markets merging with decentralized financial markets are evolving towards, as sort of like a settlement, a very efficient settlement layer / liquidity layer / collateral layer for finance. And look, it's been exciting. When I started Ripple, you know, I was engaging and talking about XRP. People didn't understand as much of it, and now I think, you know, the world is waking more up to the fact that these assets will play an important role, with the things like BTC being integrated into national stockpile reserve, as you know, President Trump announced shortly after his inauguration, and some states accepting you know, things like XRP as well for you know, tax purposes. At least in Switzerland that's the case, and into their local states reserves. So I think we're seeing the evolution of like really a maturing sort of like form of value that hopefully will bring some utility to the world at large, particularly the agentic sort of like economy we're steering towards.
Yeah. And can you tell me about the recent batch transaction bug, which apparently was, you know, never made it to mainnet and was caught, I think, by an AI tool. And I think like RippleX is looking to, you know, monitor this sort of thing or be involved in some way.
Yeah, no, totally. So first of all, Atomic Batch has really been a feature, very community driven, I'd say, first and foremost, to allow builders on the XRP ledger to batch together transactions, like multiple transactions into one, to allow, you know, to optimize things around like monetization of the business built on the XRP ledger as an entrepreneur, etc. So it's very community driven. And essentially, you know, community-oriented bug bounty program was flagging that there was an issue in some edge case around validation rules that didn't behave exactly as intended. And so that's a bug bounty program that's been installed with us together and the community. So it kind of like did its work. And obviously, we'll learn from it. We'll implement strengthening audits, you know, adversarial testing, and sort of like working with AI tool more profoundly as well going forward, to improve the resiliency. And yeah, just happy that sort of like, you know, the mechanism of the system did its job and flagged it before it went into mainnet live. No user funds or whatnot were at risk here at any point in time.
And one thing, sorry, I was curious about, but it just kind of, we jumped into the conversation itself. But I guess you, Markus, you spent 20 years working in FX at Credit Suisse and ANZ before joining Ripple. Like, what were you actually working on right before you made that move? And I guess why get into blockchain? We had such prestigious institutions.
Yeah, well, now I'm working for another very prestigious institution called Ripple. But I appreciate the question. And look, I think, you know, yeah, I was, so first of all, to answer your question directly, I was running central bank sales for an exchange for Australian New Zealand Bank out of London. That was a global mandate just before I joined Ripple. And really, I got more and more intrigued about Bitcoin, Ether, XRP, what this blockchain technology is going to be able to enable. And, you know, had the opportunity to engage with Ripple around the role. And I was just fascinated when I was going through the interview process. You know, the conversation in banking has mostly gravitated around like, how do we make money? How do we make more money? How do we preserve what we have? And here the conversation was like, hey, how do we make things around money better? And I just loved that and said like, hey, I want to be part of this. And, you know, very excited. Many of the reasons why I joined Ripple 7 years ago, I started to reflect, I think it was last year, hey, now we're talking kind of thing, like engaging with financial institutions, looking at this technology, not just, you know, investable assets, but really as the plumbing that can bring their core infrastructure into the 21st century. And this is why I joined the company. And now we have been starting to have these conversations with decision makers, with some of these financial institutions, including Aviva, EBS, or whatever I mentioned before. And so we're now really talking, and I'm excited for what's ahead for sure.
It's curious because it's rare we have like a TradFi veteran like yourself on the show. Like,
Cool.
you have a lot of colleagues, obviously, from these institutions. How did the conversations with them just like personally evolve over the years? Like, I have friends who are like directors at JP Morgan and whatnot, and always fun chats whenever crypto came up.
I would say they changed quite a bit from, wow, that's a really bold move kind of thing in the beginning, and to now, oh wow, hey, you were so right to do this, and so the personal conversation has definitely changed. But I will say, as for everyone that's been in crypto for a while, like it's a wild ride. It's it's a roller coaster. But hey, I think if you want to be part of something big and potentially game changing, something that will make a dent in the universe, this is how it's going to feel like. And so for me, it's always been about the problem set and just trying to sort of like find a way to make an impact in the bigger scheme of things. And I think like blockchain technology is more relevant than it has ever been, and is now really kind of like moving from the hype into sort of like delivering that utility that's been promising. And so it's super exciting to be part of that.
Yeah, well said. It's pretty crazy how quickly the pace moves. And I'd say pre-COVID, I thought the crypto is going to behave more like the rest of the world, but it actually seems now more so like the rest of the world's behaving like crypto in respect to how quickly things are accelerating. So definitely an exciting time to be alive.
I think in part also it has like it has some mixed characteristic. If you just look at, hey, correlation, crypto versus other asset classes, just to look at it through that lens, there's times where you feel like, hey, now it's, Bitcoin's behaving like a safe asset hedge against the system kind of thing. But more often than not, it's been more trading like a risky assets, given the volatility it has, which is also in and by itself, I think, evolving and maturing over time. And I think that will, that will maybe crystallize and solidify more over time, because now it's still a couple of things where it's just like one thing. And I think it will change over time.
Yeah. Honestly, it felt like we played a game of pin the tail on the donkey last year for Bitcoin, trying to figure out what exactly this thing is. I mean, first it was the tech equities beta. Now, at least people say it's behaving like a software stock. But I'm curious, what is Bitcoin to you?
For me, it's really this notion of digital gold. I think is appropriate, and it's just, it's kind of like, it's very scarce. It's related to a lot of energy consumption, and so I think like the store of value notion kind of thing, that makes sense for me. The way I'm thinking about XRP in contrast is more as like a liquidity bridge, a mechanism that will help really be a glue around things like, collateral mobility, settlement, liquidity, payments, liquidity, and things like this. So an asset is very, very efficient, can contribute there more. But so BTC is the first model. It's always going to be relevant. And I think that notion of store of value is just very specific, but I think it's also like what it defines it in a pretty big way. So I don't think BTC is going to become, the super efficient asset that everyone will want to use for things like payments and stuff. Like you use it more as a store of value.
Yeah, definitely, just by design. I feel like that was one of the intentions when set out to making Bitcoin, is almost a bit of a bureaucracy, if you will. But okay, good stuff. So I just have maybe one last question on institutional DeFi before I pass it back to Tim. Sorry for the wild tangent, but I just had to ask. What do you think currently? Institutions are getting wrong, or by not having a protocol layer?
So sorry, can you specify the question? Do you think financial institutions that are not integrating with layer one blockchain for financial use cases, what are they missing? I think they're missing the train, in short. When the largest asset manager in the world says like, hey, assets will be on chain, and that's how we're going to be, transforming financial markets. It's not if you should have a digital asset strategy and the infrastructure plans in place. It's about how much do you need to prioritize this today? So I literally think they're missing the train here. And I also wholeheartedly believe it will be on public underlying digital asset infrastructure like the XRP ledger, rather than private or private first networks. Just like the internet's power at the core is really ignited by the openness of the core protocols.
Understood. I'm getting the nod from production that we have to wrap, even though I would love to continue. That being said, this is all the time that we have for today. Markus, thank you for taking the time and joining us on this episode. As a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the block. Thank you. See you next time.
Thank you, guys. Really appreciate the invite.